How's it going, guys? Luke here from LAGFOREX. We're back again with another top trade of the week. Now, the trade I'm going to be showcasing today is actually still live and running as I speak. So what we'll do is I will run through my analysis and run through the reason of my entry. And then we will come back in a few hours' time and see how the trade planned out. Looking at this market, we are looking at the Great British Pound to the US dollar on the 4-hour time frame. And as we can see here, we've had lovely bearish structure. We have seen the price produce clear lower highs and lower lows, which tells us retail traders that the market is bearish. The bears are in control of the market. Now, rather than jumping on a sell position and being impulsive with the market, what we've done is we've essentially waited for some kind of reversal or further break in structure, breaking below demand zones, etc. Now, this takes us to the actual trade we've placed. It's a bit unclear here just because I have marked everything out. But if we look here, this box here represents a demand zone, a major demand zone. And if we look closely here on the 4-hour time frame, we can see that we near enough had a tap here, and then we've had a tap into this demand zone here, this wick and this wick. And since then, we have seen a break in structure going bullish. Now, why? Well, because the market was producing lovely lower highs and lower lows. And then we have seen a break in structure as it has started to produce, or should I say it's failed to then continue to produce lower lows and lower highs since tapping into this demand zone. So that tells us retail traders that, right, there could be a potential reversal in place because it is failing to continue to produce bearish structure. So there could be a reversal in place. Now, taking a look at this pair on the 1-hour time frame, we can kind of see more clearly where my thought process was when I placed this trade. So as we were looking at the 4-hour before, we could see how it was producing clear bearish structure. So we've got lower highs and lower lows, and that was great. Once we had the tap into demand, we have basically seen a break in that structure. So rather than it continuing to produce a lower high and then a lower low further down, breaking below the demand zone, it's kind of hit this point and basically reversed. Now, the purple circles mark the lower lows and the green circles mark the lower highs, and that was for the bearish structure. Now, for the bullish structure, this new trend that's being set in place after hitting the demand zone, tapping into demand, the yellow circles mark the higher lows and the blue circles mark the higher highs. Now, if we just zoom in a little bit more, we can see how we've had the tap into demand, almost forming a double bottom before starting this new bullish trend. And we can see here that we have a low here, then we have a higher low and another higher low. Again, we have a high and then we have a higher high. And what looks to be producing now is the next impulse up to produce its next higher high. The reason for my entry was, for one, we have seen a break in structure. The trend seems to no longer be bearish and it looks to be reversing, going into a bullish trend. My second piece of confluence is the fact that it's tapped into demand, it's cleared that liquidity and could be taking its next push up. Then my third piece of evidence is obviously looking at clear structure in the market, so higher highs and higher lows. And then thirdly, to get that added confluence, we have also used an indicator, that indicator being the Fibonacci retracement. And what we have essentially done is marked the start of the impulse, which is here, to the end of the impulse, which is here. And then that gives us parameters at which the price could retest to before starting its next impulse up. And as you can see here, so A, start of impulse, B, end of impulse, C, end of retest. We can see that it has actually tapped into the 61.8 ratio, which is one of the golden ratios within the Fibonacci, and since then produced lovely bullish strength. Now, as this is the 1-hour time frame, we can see that we had the first tap here at 7 o'clock, and then we had price shoot up, but then close back down here. Now, that tells me that the bulls are taking over the market as the bears have failed to break below this point. And then the following hour candle produced us that lovely bullish strength, and this is exactly where we entered. So I actually got an entry at 1.3233, keeping my stop loss just below the low of the retracement, the trough as some call it, which marks 15 pips as you can see. And then we have a lovely take profit of 60 pips, which gives us a lovely 4-to-1 risk to reward ratio. So straight away, we have implemented good risk to reward by having a stop loss of 15 pips and a take profit of 60 pips. We've then used good risk management as we are implementing 2% risk with every trade that we place. And then on top of that, we have set our parameters in places that are somewhat reliable. So if price was to break below this point, it would essentially be a break in the structure and we would look to be closing the position anyways. Hence why we have kept our stop loss so tight at 15 pips. So as you can see, the trade is currently running around 23-24 pips, which marks a lovely 3% return already on this trade. So what I have done is I have closed half of my position at 3%. And I'll put a screenshot up now of that. So as you can see, I have closed half of my position and I am leaving the rest of my position running to hopefully hit my take profit of 60 pips. Now, in order to manage my trade accordingly, I have also moved my stop loss to entry, making sure that my trade is now risk-free. Again, looking at this pair on the 15-minute time frame, we can see this lovely bullish rally, and the 38.2 ratio kind of marks the last low that it's produced. Now, if price was to break below this point, then that could be an indication of a potential reversal in trend. But as you are all probably aware, trends can be easily broken on the lower time frames. Now moving on to the 5-minute time frame, we can see a lot easier this last low that it produced in the market around that 38.2 area. So as I said, if price does come down and breaks below this point, breaking structure essentially, because it would be breaking this high here and breaking this previous low here on this bullish rally, then I may look to take a close. But again, we do have our stop loss moved to entry, making this trade risk-free. So if for any reason I wasn't around to check on the trade, if price did tap back into our entry price, then the trade would automatically close and we wouldn't lose any funds from that remaining position. So now that I've explained my analysis and the reason for my entry and the risk management that I've put in place, I'm now going to leave this trade to run and I'll come back in a few hours and update you guys with exactly what went on with this trade. So we're back a few hours later, and as you can see, the trade didn't play out exactly how we wanted to, but thankfully, due to using good risk management, we did get stopped out at entry, so we didn't lose any equity from this trade. Thankfully, we took a partial at 20 pips, which marks 3%, but as it was only for half the position, it would be 1.5% equity returns. Unfortunately, it just failed to set that higher high. As you can see, we wanted it to come up to this point, and it failed to set that higher high above this previous one here. So as soon as it set a lower high and started to come down, I was conscious that maybe our trade was going to reverse and I was going to see price come lower down. And looking now, that was quite evident, and that's exactly what's happened. But now price is at this point, it does seem to be setting lower highs and lower lows. So this could be potentially another reversal and maybe a next move down. As we can see, we have a high here and a high here, this high being lower than this one. And then we have a low here and a low here, and this low being lower than this one. So for me now, it's just going to be about waiting and seeing how price plays out these next coming days and seeing if there's any room to jump on another position. Now, next Monday, I am going to showcase another trade that I did place last week and go through the process that I went to make 70 pips and a 6% return on that trade. Now, I hope you guys have enjoyed this video. It has been an interesting one, and we've gone through the markets live throughout the day, giving you updates along the way. If you guys can find any areas at which I could improve, or any feedback, or anything that you feel I went wrong on, please leave it in the comments. I am open to constructive criticism, and I am always looking for ways to improve. So just to summarize, we did walk away from this trade making 1.5%. We took away 20 pips from a partial and then moved our stop loss to entry and unfortunately got stopped out. So yes, we didn't reach our take profit target, but we did still profit from this trade. I just want to say a massive thank you for watching, and I'll catch you in the next top trades of the week.